So yes, but what if we adjust it for CPI? What does it look like? Well, it looks like this. Silver finally breaking out above 45 years of resistance when adjusted for the CPI.
Yeah,
Kaboom.
kaboom is right. I just want to point out how inexpensive silver is when you do this. When you adjust it for the CPI, look at how high that 1980 peak is compared to where we are today, and that is adjusted for the CPI. We know that the way they calculate the CPI is a lie. They were trying to modify the original version that ran from the end of World War II until 1982. And the truth lies somewhere in the middle. But
Mike Maloney believes silver's current rally is only beginning despite hitting $58 to $59. He argues sellers will regret selling now because silver has been in a deep supply deficit for 5 to 7 years, with no major new mines coming until the 2030s. With over 1.1 billion ounces of cumulative shortages, he says physical silver will soon become extremely hard to find, and then very expensive. Technically, silver has broken major patterns like a 45-year cup and handle, and when adjusted for inflation, it's still far below its 1980 peak. The gold-silver ratio of 73 also points to huge upside if it returns to past levels. Overall, Maloney thinks silver is massively undervalued and could reach triple-digit prices. Thanks for watching. Subscribe to Fine Metals for more updates.
And speaking of the above ground stockpiles, you shared with me this table, which I believe comes from the Silver Institute, showing the silver supply and demand year over year. And this table is really busy and noisy, and I don't expect people to look at it for very long. So let me just point out something very quickly. The market balance, basically the amount of new silver supply minus the demand, is a small positive number typically for 5 years in a row, and then it became a fairly large negative number for 5 years in a row. So we used to accumulate more silver around the world, basically dig up more than we used in industry or investment. And now that trend is reversing. So now the trend is going negative, where basically demand is outstripping supply.
if this thing went back to another 5 or 10 years, you would see that silver's big move from the fours into the 20s occurred while there was a silver deficit, like there's been for the last 5 years. Then when it hit $48 in 2011, that spike, a whole bunch of people went out looking for silver. Takes a minimum of 5 years to get into production. And that's the reason you're seeing these small positive numbers. We had a deficit. The deficit went away, but there's this delay. And that delay is good, because now it's saying that we're probably not going to get back into a positive situation with silver supplies until the 2030s. It takes a really high, the cure for high prices is high prices, because it'll bring more to market, except to find a discovery, to turn it into a mine, and to get that ore above ground and refined into bars takes 5 to 10 years. There just isn't enough. There's not going to be enough for at least until the end of this decade. And that means super high prices. When you go to that market balance, less exchange traded product.
And basically we can see, I'll explain this in a moment, but what we can see is that the amount of silver available has been shrinking for the last 7 years. That's the key takeaway here. So what are we looking at? The dark gray is the market balance. So above the zero line, you can see small positive numbers in dark gray for 5 years. And then those dark gray bars go negative and they start getting bigger and bigger and bigger. So basically we're running out of silver.
The dark gray market balance is supply versus minus demand.
Exactly.
Yeah. Okay.
Then we factor in the light gray bars, which is the net investment in ETPs. Those are exchange traded products. So basically, if some of the silver that we're mining goes into exchange traded products like ETFs, then it's effectively coming off the market, right? It can't be used for anything else. So we can see those light gray flows sort of added in with the dark gray flows. And the net effect when we combine them is the red hashes here, these red bars.
Right. So I want to point out for people in 2020, the red line is a little bit above the bottom of the light gray line, and that difference there is exactly equal to the dark gray line above. So it's the ETBPs, and then you've sort of subtracted what the surplus actually was in the market balance, right?
Yeah, exactly. I think
That's
people
the reason the red line isn't at the bottom.
Yep, correct.
Okay.
And so the net effect here, the way we interpret this is if we look at the red line, we see the red line is above 0 3 years in a row. So we were sort of adding more silver to the world. And then the red line is below 0 quite substantially for 7 years in a row. So that silver is disappearing. So the available stockpile is dwindling. We're basically running out of silver year after year for 7 years.
Yeah, and this is just a measurement of each year. And what I find interesting is that the market balance, you can see from the last table, the market balance went negative in 2021. The market balance with the ETPs included went negative in 2019. So 5 years for the supply demand, 7 years when you include investors.
Exactly. And so let's see what it looks like when we take all of these years in red and look at it cumulatively. How does it add up 1 year after the next? And we can do that in a waterfall chart that looks like this. So we have those initial bars above 0 that keep adding one after another, adding to the previous one. And then we get those 7 years of dwindling balances. You can see that it falls below 0 fairly quickly, and it goes further and further negative for the remaining 6 years. And the cumulative effect is that there's 1,100 million ounces or 1.1 billion ounces of silver that we've reduced from the available stockpile over the last 7 years. So
yeah,
it's dwindling. It's dwindling.
And I want to point out to the viewers that if this chart started in 2019, that bar right there would start, the top of it would be at the 0 line. The only reason it's above, because that year is a down year. The line that connects any of the two bars is the close of 1 year and the opening of the next year. And so if the data started in 2019, everything would be below the 0 line, and that would place 2025 down and 2025 isn't over with yet. That was a projection that we saw, and the demand has increased. By the time they've got the final data, 2025 is going to be a much larger deficit because of all the investment demand that is happening right now. Those projections are always like a month or two behind. So they made those projections before the rush that is happening right now, before silver broke into all-time highs. If you started this in 2019, it would almost be 1.2 billion ounces of deficit cumulatively. But when you add the rush, it's probably going to be more.
Exactly. So yes, smart silver stacker, that's a mouthful, says the gold to silver ratio continues to drop like a stone. Silver's time has come. And look at this. He's got a wedge formation and the gold silver ratio is dropping through, which of course means that silver has been outperforming gold lately over this period.
Right. And it's in the 70s right now, I believe. And, it was I made some large purchases during COVID when it was up. I didn't nail 120 to 1, but I did get some that were way over 100, like 110. However, at 70, silver is still an extreme bargain at 70. It went to 30 in 2011. It went to 14 in 1980. And that day is coming again. But with the fundamentals underneath what's happening in silver, I would expect that we could go down way below 14 as far as the ratio. Yeah.
Yeah, well, you asked me to put together this chart specifically for this video. I think it turned out great. This was actually a lot of fun to make. I think it turned out beautifully. Okay. But yeah, basically you were just saying the gold silver ratio is around 73 right now as of a day or two ago. And by the way, before I go any further, I should say that this entire chart is upside down.
Yes, I had you invert it so that it show when silver is outperforming gold, this ratio is going up, not down. Bargain. It is dirt cheap. Now, look at what the average was, that red line going through all through the 70s. That red line, the 2011 peak, it only visited what was considered fair value against gold all through the 70s. That was like the natural balance of the gold-silver ratio was about 30, and that's what it hit. It wasn't. There was an intraday, I think, where it hit 30, not 31.7. So this must be end of day, or maybe, yeah, it's not weekly. It's end of day. And 14 in 1980. So from where it is right now, it's saying that it should outperform gold easily. It'll outperform gold 2.3 times, and it could outperform gold by more than 5.2 times. And gold is still, I believe, a minimum of a double in dollars. And so you take this 5.2 times 2, 10.4 times, and that is the minimum. But the gold silver ratio could easily, when it hit 14, there was a huge strategic stockpile of silver that the US had. They've sold it all off. The above ground stocks were far larger than they are today, far, far larger. Today, we are in a situation, and you didn't have, derivatives trading was very new. You didn't have hundreds of ounces of paper contracts for each ounce of real deliverable silver. The potential to blast past that 1980 peak of 14 exists. So if you're at 73 and it goes to 10, you got 7.3 times the return on silver that you would get at gold, and gold doubling that. I mean, the potential here for silver is just enormous.
I couldn't agree more. Absolutely.
Silver has been doing some amazing things lately. Alan, why don't you take us through your presentation here?
Absolutely. Thank you, Mike. So yes, as we sit down right now and record this, silver is at $58, almost $59. And anyone who's ever bought silver is now in profit, nominally measured in dollars. So people want to know, is it time to take profits? Should I sell? Is the rally over? And I think if you sit through this video, you will discover, no, absolutely not. The rally is just getting started. So anything you want to say, Mike, before I dive into the charts?
No, everybody wants to know, is it too late? Because, what is sad is when you read in the comments and when you do some research, you find that at local coin shops, there's a lot of people that are selling. And when that is done, and it will be done sometime soon, first of all, they're going to regret it. But second of all, without the people selling, it will explode. And just wait until gold also gets into all-time highs again. Once gold and silver are both in all-time highs, I think silver is going to turn into a rocket ship. Yeah, now this one is zoomed way out, going back into the 60s. And what you see here is you can't even see the little cup and handle that we just completed, because this is monthly data, not I believe.
Yeah, he said he actually used a 3-month line chart for this. So 3-month data point.
Oh,
unusual.
okay.
Quarterly. Yeah.
That's the reason it's showing the 1980 high at 20. What is that? $26?
Maybe 28, something like that, but way below 50.
Right. But look at the 45-year cup and handle that we have broken. We've broken it on a yearly, a quarterly, a monthly, all ways of measuring this. Maybe not the yearly yet, but this is a quarterly if he's using 3-month. And we are off to the races.
The breakout in silver that happened a few days ago could potentially take silver to his $85 price target in a matter of 3 to 4 weeks. There's all kinds of rocket ship predictions like this. This is just one of them. but you can see this breakout that he's signaling. This is the beginning of a new era. It's not the end of the traditional one. So yeah, rocket
A couple
ships.
things I want to point out. First of all, this is from the end of last month, but take a look at the little cup and handle there. Right. So we've made a cup and handle that we've broken. And then there's a bigger cup and handle that goes from 2011 that we broke a while ago. And then there's the 45-year cup and handle that goes back to 1980 that I'm pretty sure I was the first one to identify. But and we've broken out on that one as well. So these patterns, if you look at how they fulfill, it's a powerful pattern. And the one that's 45 years old, there is a lot of upside technically. If you're a technical analyst, you're coming up with silver prices that are rather breathtaking. So he's got a target of $85 in a matter of 3 to 4 weeks. It could even be higher than that. I don't know. But in one of our last videos, or a video that I did, I guess, maybe it was a video that both of us did, I compared the bull market of the 70s and showed how it went up and then it broke out right at the end of November. It went up, it paused, and then it broke out at the end of November. And then that increase showed that we should be in triple digit silver. And I suggested maybe what we need to do is just move the decimal point one place to the right.
So eventually you're going to run out of silver and you won't be able to get it. That's why we call it unobtainium. And these are the 5 stages of silver: undermined, undervalued, unchained, unstoppable, and then unobtainium, in progress.
Yeah. And I have to add a 6th one there. After it becomes unobtainium, it becomes unaffordium because nobody will be able to buy it. That is when, once you can't get any, that's when the paper contracts diverge from the physical, and physical just absolutely explodes